you're a 1099 employee. What are my mortgage options? In this video, I'm gonna break down all of them so you know what choices you have when getting pre-approved and all the mortgage options. So you're a 1099 employee, maybe you're a realtor, a salesperson, something along those lines. Right out the gate, you can do a regular conventional FHA VA loan where they're gonna look at your tax return and take a look at the last 2 years average. On conventional, sometimes it can be 1 year. On what that income is after write-offs is what they're gonna use to qualify you. So if you made $100,000, but you wrote off $70,000 in expenses, that bottom line number roughly is about $30,000. So that program many times can hinder you getting approved for how much home you want and how much money you really know you make versus the write-off. The next option is bank statement loan. It's gonna take a look at the last 12 months of your bank statements, showing those deposits, and then a percentage of that as income. So maybe 70% of your deposits will be able to use as income to qualify. So if it's $100,000 a year, 70% of that is $70,000, way more than the first option. Then there's a 1099 loan. Let's say you can't do a bank statement loan. One reason may be because your deposits fluctuate too much. A 1099 loan is just gonna look at how much you made on your 1099. A bank statement loan is gonna look at the deposits. And if you had 1 month where you deposited $50,000 and every other month was closer to 5 or 10, underwriting is normally going to extract that deposit out and not count it toward your income because it's not in line with what your business normally does. A 1099 does not do that. It's just going to look at the 1099 amount. So if you fluctuate big time, let's say you make all of your money in 3 months, it may not work for a bank statement loan, but it will work for a 1099 loan. I'm working with a realtor right now. That was their situation. The deposits fluctuated too much. A couple months maybe with no sales, no commissions coming in, and then a couple months with a massive amount of commissions. Underwriting had an issue with those deposits and how much income we could actually use, and we flipped to a 1099 loan, and that gave really the answer to be able to get her closed on the home was that program. You do want to go in the order of this video because it gives you the best rates and terms, but the truth of the matter is any one of them is a great program. You need to work with a lender who knows 1099 employees and their situations and how best to structure the deal, which is me. And so I hope you found this information helpful. If you did, I'd love to be your lender, and stick around for this next video. I think you're gonna like it.